Good evening, everyone. Welcome to UC City Hall. Our first meeting tonight is a workshop. It is Thursday, June 3rd. It's 5:30 p.m. Our workshop this evening is on Ordinance 21-14, Established Procedures for Implementation of a Fire Assessment. I'm going to turn it over to our Finance Director, Mike Shepard. Mary, is there a quorum present, proper notice been given?
Yes, Mayor.
Thank you so much.
Mike Shepard, Mayor, the Commission, Finance Director. Tonight's to go over the procedures that we'd be doing. Oh, it's not on?
Talking to his
Or-
belly button.
Was it answering? Tonight, we're going over the procedure, the ordinance that we're doing is for establishing an ordinance to allow us to do the fire assessment fee. This by no means commits you to going through with the process, but it just establishes a new ordinance within that. And we do have Sandy Walker here to answer any of the questions that we may have. We have to notify the property appraiser by July 1 on what our intentions are going to be.
Anybody have questions of Mike while he's at the microphone?
At the previous meeting, you requested the listing of the per parcel assessment, what it would be. You have that. You obviously still have the report, so.
Please do.
I have a question. On page 9, could you explain to me the non-ad valorem assessments? Does that mean that,
That's-
okay, so,
That would be, for right now, it would be the $100 for the residential, and then the commercial would be computed based on the square footage, up to
Now-
a maximum of, is it 3,500? There's a maximum for all the commercial and residential ones. 145,000.
145 for commercial?
Yeah.
Is this tax deductible for businesses?
Pardon?
Does that mean that it's not tax deductible for businesses?
It'd be tax deductible for businesses,
Okay.
yes. It would not be tax deductible for
Average home.
residential.
Only if it's for rental, correct?
If it was a rental, that's different, but personal property, essentially they took away IRS took away the itemized deductions, and most people are doing
That'll
the
be
same.
over in 2025 though, right?
Hmm?
That will be over in 2025?
No.
I believe.
Oh, I mean, whether you can deduct it or not? For IRS purposes, I don't know. I would imagine it's going to stay the same.
And that's at 3%, correct, for commercial businesses?
For 3%, the increase every year on the
No,
value?
no, not the increase, just the initial, it's 3% of the square footage, so that's,
Oh,
like residential's $100,
yes, residential's a flat fee.
flat fee of 100.
Correct.
But for commercial businesses, 3%.
It is 15 cents per 9 cents a square foot is what that would be.
Is that also for?
And that, well,
like-
that's based on the $100
Yes,
level
I
that
knew that.
okay.
So where did the 145 come from?
One,
Oh,
yes, that's the maximum
Okay.
square footage for commercial and industrial warehouse.
So it's 9 cents a square foot for commercial and industrial?
Yes, ma'am.
Okay.
No, yeah, that's correct.
But commercial is 9.
Right. Mhm. Slide 10. Slide 10. Oh. I do? Oh, there it is. Okay.
I can't read it, Will.
Right here.
That's okay.
Yeah, so it'd be 9.2, and then
Can't read it.
institutional,
Good luck with that.
those are,
At the 55.5
Yeah.
level, which is the one in the middle, single family is $100.
Correct.
Commercial is 9 cents per square foot to the maximum of 145,000 square feet. Industrial and warehousing is 2 cents per square foot, and institutional is 28 cents per square foot.
In the sheet, I think that Ron provided you, it has everybody's listing in there.
Okay. Thank you.
It does have the amount that would be assessed to each property.
Of course, when you go to print that off,
Yeah.
Yeah,
you can't print it off. I
I
ended
know.
up throwing it away.
If you need it, I pared it back down, and
Because I didn't need all that information. All I needed was basically your name and what you're paying.
I have mostly basically that for the top.
50.
Everyone 500 and above,
Yeah, $100, I don't care.
yeah. And the other commercial ones were 500 or less, that I quit printing them.
Yeah, I don't blame you. I don't blame you.
Emily, any other questions that you had, ma'am?
I think that's it, let me see. Okay, that's it.
You're good?
So the per unit is each unit for residential. So if it was an apartment building, number of units they had times the 100 would be on there. And the same thing for some of the mobile home parks too.
Are there any questions or concerns, ma'am?
No, this is just a really difficult and complex. So I'm just going to try. Industrial is how much? 2 cents? 2 cents per square foot,
Correct.
2 cents.
To a maximum of 100.
145.
145,000.
To a max, yeah.
Yeah.
Square
Okay.
feet, I'm sorry,
Okay.
145,000 square feet.
Example, I guess, on one of them, it's $5,800 approximately.
Yeah, Florida Foods is
Florida Foods.
$5,800.
What about Hazelton Village?
That one is based on the number of units that are in there.
And I know it's different, that's why I ask.
Yeah, and
It
that's
was like
ba-
30 grand, wasn't it?
It's close to that, but
Yeah.
what the park would do would send that back to the residents that own those individual pieces.
You have to understand, that's probably one of the most affordable housing things we have left in Eustis.
It may be.
And they cannot absorb that. That's my angst
Yeah.
with this whole thing.
The company that builds them
Yes.
would get the 30,000, then they would have to
They're
send
going
it
to
back
pass it
out
on,
to
they
the-
can't absorb that.
Yeah, they
I
would.
understand.
Yeah.
So the impact would be on,
The homeowner, or the
Homeowner.
renter.
and the lower
For the
income
people
and
in
the
the RVs
businesses.
and the mobile homes.
Yeah,
Yeah,
whoever
the
they-
impact, the greatest impact would be on the low income and the businesses.
Yes.
Yes.
And what about the churches?
They're in
That's-
there.
Yeah.
They're in here. The initial is, we were buying it back down for the churches and schools. It's hard to do schools because they're a governmental body, and along with
That we
anything
get.
else, it's almost
Yeah.
impossible. The churches, that's another hard pill to swallow, I guess.
Did you say you were buying it back down?
We buy it back down so that, I think the initial was 1.3 million. And then we have the estimated buy downs of 152,000, which is for government and institutional.
Could you explain that term buy down?
Yeah, exactly.
We're just,
We pay it.
we essentially pay that back so that they don't have to pay it. And so the net profits to us, or the net money that we receive would be the 1,143,000.
So they would get a bill across the board of $152,000 less.
Yes, for the institutional.
Let's Andy.
So the way the buy down works is because this is a non-ad valorem assessment. And so what you can't do is you can't pass that burden on to those that are paying. So what we've done is we've given you the impact, so you'd have to pay it through the general fund. If you're not funding at 100%, it's already being passed through the general fund because you're funding the rest of the fire department budget through that. So basically, you can't say, okay, we're not going to charge the churches and the schools, So everybody else's rate has to go up $2 or something like that. You can't do that because then they're paying more than their fair share. So you have to keep it within the fair and reasonableness. So basically, we've given you the impact of what the churches and nonprofits would cost you to buy it down, which is $125,000. So that's their burden, that's what their benefit would be, and you would make a policy decision. It's not an automatic thing. You would make a policy decision to exempt the churches and nonprofits. The exemption would be a two-pronged test. It would have to be, the parcel would have to be 100% wholly tax exempt, and it would have to be of institutional use. Institutional use are things that you would consider good for the public, the general public, and not necessarily a commercial business type of environment, which would be like a churches, the hospitals, and things like that. So that's how that works, and that's the impact that it would be. So you would net about $1.15 million at the $100 rate. And that is all still policy decision. The $100 rate isn't anything, this is just what staff is recommending. You guys would have to make that decision.
I guess for me, what the part of the issue I have with it is that the not-for-profits, churches, whatever, they don't pay taxes to begin with, and now we're being double taxed. It's costing us twice.
Well, you could charge them.
No, I know we could. I'm saying if we do the buy down, you know what I'm saying? If we don't charge them at all, but I can't even agree to the buy down because they're already not paying taxes. And I don't have a problem with them not paying taxes, but now you're not paying taxes, and now you're making the city pay again because you don't want to, you know what I mean?
And another option that you'd have, it wouldn't be, and these are all policy decisions that you would have to set. You could provide a hardship exemption. You could say if, because it's going on the tax bill, and if somebody can't afford to pay it, then it goes through the same process as your taxes. A tax deed gets sold, and you could potentially lose your property through a tax deed sale. So since it is going on the tax bill, you could say, look, if somebody owns their house and it's eligible for homestead exemption, it can't be the rental house that they own and they're not living in. So it's got to be eligible for homestead exemption. And they meet a certain income level, you would set that. It's your policy decision. You could say, then we will provide a hardship exemption, and you can either charge them nothing at all, and then you would buy that down like you do the other exemptions, or you could say, but we still want you to pay something, so we'll buy it down at 50%. Or you pay $25 and we'll pay the other $75 on your behalf. You could do that, and that would work for people who actually own their houses. It wouldn't work in the situation where you're talking about a mobile home park or anything like that. Now, RV parks are different. RV parks are charged on the commercial rate, so theirs is going to be probably smaller, because what we do is we assign 191 square feet to every RV space, and then charge it at the commercial rate. So it's usually less than the residential rate. And the reason that we do that is because by statute, you have to treat RV parks similar to how you treat other hotel, motel, commercial businesses. So you can't treat them like a dwelling unit and charge them based on a dwelling unit.
The problem with, I understand what you're
Yes.
saying, but part of that is that they're charging them whether they're renting them or they're not. They're empty or not, they're paying it.
Well, no, you could have a vacancy credit. So if there is an RV on the spot, yes, they would be charged. But if there's no RV on the spot, then they could be eligible for a vacancy credit.
What about a mobile home park?
Well, that would be the same thing. If you have an empty space and there's no building on there, then you would be eligible for a vacancy credit. But if there's a mobile home on there and it's just not rented, just like a hotel room that's not rented, then it's still a fire hazard, and you still have to provide fire services, so they would still have to pay for that. But if it's an empty space and there's nothing on there that you have to provide fire services to, then they wouldn't be charged for that.
Okay.
I would think, though, but for someone like Southern Palms, they have they may charge that out 3 to 4 times during a year for
And
one
that's the-
site.
Yeah,
So I don't know that they would really qualify for a vacancy, because
I know, because
at
that
one
thing
point in
ebbs and
time-
flows.
It is a formula. It would be
Yeah.
a formula that they would, that you would do. and they would apply for it. They would sign an affidavit saying, this is how much it was rented. You know, they would look at each space and how many days out of the 365 days. And then it would be a proportionate offset. It wouldn't be like, oh, it was vacant the whole year. If it was vacant the whole year, it wouldn't pay. But otherwise, it's a math calculation that we do for that credit.
Any other questions or concerns on this side? Any on this side?
Just thoughts, thoughts are going through my head. What if, and I don't even know if it's reasonable, but what if we cut everything in half for the first year?
You know, it's funny you say that, Karen, because I know that there's some hesitancy about that, and I thought the same thing. Why don't we at least just start off small and get the comfort level and decide from there? I was thinking the same thing.
Half of what? Half $100?
It would be the 27.5, 27.5.
27, the last
There.
column on there, and the net would be about 565,000.
I was thinking the exact same thing. You know, we're growing. We know we're growing, and I think everyone out here knows that it's coming. And I think if we don't take the steps now to get ahead of this, when we get to where we're going to be scrambling. And I hate for us to scramble and make bad decisions in a hurry, as opposed to at least having the forethought to think this thing through and to make it happen.
Is this good for 3 years?
The report is.
The report is that right, Sandy?
3 to 5 years. So if we didn't do it this year, we could do it next year. One of the reasons why I'm saying that too is we just came off of COVID. We had many businesses that did not make it.
That's,
I just have to look at the whole thing.
And this would come, I'm sorry,
No, you're good.
this would be effective next year.
be effective for
This taxing year comes
this
out.
10/1/2021.
Right.
2021, yeah.
Your next tax.
And it'd be the next tax bill due
If they would
by
receive.
November.
November, yes, sir.
Yeah.
Correct.
And it would be paid the same way that they pay their taxes. So if they have an escrow, it would probably be rolled into their monthly escrow. So it would be paid however they pay their taxes. If they pay them all up right, then they would have to pay the whole $50. If they pay it through their escrow, then it would be financed the same way as their escrow on a monthly basis.
Unincorporated, do they pay this tax?
They
pay
a
to the
lot more
county?
Because they pay it to the county.
Pay to the county.
This is only incorporated
And how much are
uses.
they paying?
About 242, I think, isn't
I don't know.
219, I think.
219?
It's
No,
219.
The county fire assessment is,
I thought it was like 197.
I know, it's over,
It's over 200. I think it's about 219 the last time I
it? And I
looked.
think Claremont may be the only other city that does not.
Groveland does not have one.
Groveland doesn't either?
Yeah, that's right.
Yeah,
Groveland and Claremont.
the unincorporated residents also pay an MSTU tax for fire and for ambulance service. So they pay additional taxes on top of, for fire and ambulance service.
What about commercial property in the county?
I'm sure they went through the same process and formula that we did, so I don't know what their individual
And I
rates
also
are.
think that they, when I looked at it, because we helped Leesburg implement theirs in 2015, and they were trying to figure out whether we stay with our own fire department or we go to the county, which would be cheaper and better for our residents, and they decided to stay with their own fire department. And so I was looking at that, and when I was looking at that then, they do charge the churches too. They don't charge them at 100%, but they charge them, I think, at either 50% or something like that. So they don't exempt, 100% exempt their churches either. So they're paying something.
We still have to buy it down from the general fund.
Well, I know, but I'm just saying the
Yeah.
county doesn't exempt them all the way.
Oh, yeah.
We have to buy it down from the.
You have no
you don't
choice.
You don't have to buy it down.
Well, then how are we going to get paid? If they,
If you exempt them,
yeah, we
then you
buy
have to
that
make
down.
up that extra money
Correct. Yeah.
from the
Exempt
general
them.
fund.
If you don't exempt them, then they're.
But I
You
mean,
don't.
at 50% either way, because you just said 50%.
But you don't
You
have
still
to
have to
exempt
buy it
them.
down.
You
That's
just-
different. You
don't
have to
have
buy
to
down.
exempt
We can choose not to exempt
Yeah.
them.
Yes.
At all.
That's correct.
If
That's
you,
correct.
if you don't charge them 100%, then you're buying down whatever you're just.
Right.
Yes, that's right.
And you're already doing it anyways, because you're already funding part of the fire department with the general fund. So you would just continue to fund that portion with the general funds that the fire assessment doesn't collect.
If you remember the operational structure on how, when we presented this back in January, it was $500,000 of it was to be utilized to put the rescue truck back on the road and hire 6 additional firemen. And anything additional above that was going to be used for other public safety expenses, obviously to address police department, with a diversion of funds from the general fund, from the fire, or excuse me, with the diversion of funds of, try it again. We were increasing the fire budget by $500,000. So that only frees up $65,000 to put in of additional monies by the diversion of 65 from the fire department into from the general fund with the fire assessment to then pay for additional public safety expenses. So that,
And it's truly not a fire assessment fee.
yes, it is.
No, it
Not
pays for-
really.
It's paying for fire assessment, but now it frees up money.
But then you just
within
took
the
away
general-
half of his budget.
No.
No.
We're increasing his budget.
What's his
right
budget now?
It's $3 million.
Okay.
So we're increasing his budget by $500,000. So his budget next year would be $3.5 million.
I thought this was $1 million.
No, I was
No.
talking under the new scenario, if we went to the half cost.
Oh, okay.
Out of the 3 million, this would, if you did the $100, this would pay 1 million of that 3 million. All right, and we're going to only add 500,000 to it.
Correct.
So we have additional money that's freed up now to do something with
I
public
understand what you're
safety.
saying, but if it's fire assessment fee, then it all goes to fire.
It is all going.
It'll all pay for the fire.
But it
Yeah, but then
doesn't-
you're adjusting the budget to go to police, and it's not that I'm not against public safety,
No,
but
it
that's not how it's
doesn't-
being sold.
It doesn't, the fire assessment doesn't necessarily require you to increase your fire budget. What it allows you to do is take fire assessment funds to put in your fire department to free up general fund revenues for other expenses that we're doing. The upside to it is that we are increasing the fire budget by $500,000 to increase services.
Commissioner, you get about an hour and a half to think about it. It's the last thing on our agenda this evening. So you're going to be able to ponder it for a little bit longer, okay? And we will bring it back. It's the last item on our agenda this evening. We're going to go ahead and adjourn this meeting, and we're going to, don't go anywhere, because we're going to come right back as soon as Mary tells me to start our next meeting.
Huh?